Good morning, this is Ian Coleman from PIA First. It is Wednesday the 27th of June 2018. Today we're going to be looking at dollar CAD. Now, when we break down the time frames, it does highlight sort of mixed views, but selling into mild rallies today not only offers quite a decent intraday play or short-term play, but it also offers quite decent risk reward for a medium-term outlook too. So let's break down the time frames first, and then we can explain why we're seeing this this mixed picture. Now, the monthly chart highlights quite a long period of consolidation. So we had 28 months of mixed and volatile price action. We have broken the wedge formation to the upside. So normally we'd see an impulsive move towards the top of the wedge, which is around about 147 the figure. A reverse trend line of note is 130.75. So that's bullish. But if we go to the weekly time frame, and here the purple line is that bullish monthly ending wedge formation, but we've also got this bearish ending wedge formation on the weekly chart that sits inside of this this pattern. And if we note last week's price action, we did reverse or reject the trend of higher highs at 132.59, and we managed to close down around those levels. Now, if we move back inside this wedge pattern, then we've got trendline support at 127.76. If we go to the daily chart, here we can see that we had a bearish outside day from last week, the 22nd of June. Now, a bearish outside day basically means that price moved to the upside. It was then strongly rejected, and it actually engulfed the previous 2 days price action. So if we just zoom in on that a bit, and often we see these patterns at the top of a trend. Bespoke support is located at 132.52, and that actually held back any follow-through selling in dollar CAD. However, if we go to the intraday chart, here we can see that for the last 2 days we've had pretty mixed and volatile price action. Actually posted inside soldiers on the daily chart, which is a clear indication of a non-trending market. We do believe that this move to the upside is corrective. We've got previous resistance coming in around about here. The actual high trade is 133.35. If we look over here, we've got a 61.8% pullback level at 133.35. Now, sometimes we talk about DMARC. DMARC has posted a 13 count on the intraday chart, which normally highlights the end of a trend. There is scope for some mild buying in morning trade, but we're looking for that to be limited. Bespoke support to the downside is located at 132.10. So like I said, it offers quite a good risk reward trade on an intraday basis, and then if we do push through, it would be wise to leave maybe a small amount of the trade on to try and push down towards that 128 support level. So our call today in dollar CAD is to sell this 61.8% pullback level. So we're looking to sell at 133.35. The stop is going to be placed at 133.70. There's two targets. 132.10 is that short-term support, and if we break there, we'll then look for 128 the figure.